Can I give my left curve reaction to this?
Yes, please.
I'm open to being rebutted on. This is the most unproductive bullshit ever, right? Like currency arbitrage. It's the most like there's like millions of people betting on the like disparity between the value of currencies. It's so unproductive and stupid. And that's like that happens in crypto too, obviously, in a more permissionless way. But the use case of a, excuse my injecting a Sailorism into every episode we do. Actually, the best pitch I heard on Bitcoin as an asset class is it's an apolitical measurement of value. And it's a completely different mental model of storing energy and money and whatever else. Just when I read about this stuff, I'm just like, I can't, it's unbelievable. Well, we're going to make these games, right? That humans make these like idiotic games up.
There's a whole industry called banking that does this even more.
The shared myth on top of this. Yeah, the big short, mortgage-backed securities. Like somebody's going to be cooking up a better Ponzi.
Welcome to another episode of Not Investment Advice. We've got the NIA boys here today. Trung Phan, Jack Butcher, Bilal Zaidi. Boys, good to be back. How's it feeling, fellas? Trung, you were on a little Euro trip?
Yeah, just a quick recap. I have a lot more thoughts on it. We don't have to go too deep on it today, but came back from about 3 weeks. Landed in Munich, went to Prague, Budapest, Vienna, and then finish in Croatia.
Incredible.
First question. Have you guys been to a lot of those cities yet? Central Europe?
Probably like half of them.
You've been to more than me. You've been to more than me.
Yeah, sure. That's a lot. That's a good
you
trip.
didn't? Okay, so, have you guys been to Croatia?
Yeah.
No.
Croatia.
Beautiful.
Well, Jack, where did you be? Where did you be from that trip? I know Bilal's hit a lot.
Where have I been? Basically, my stag do. I've done a few cities in Germany.
You didn't say Magaluf, so that's
Austria. No, but every other time, that was where I'd be Ibiza or,
that's
any shot I had at getting on an EasyJet flight.
Yeah, the 12-pound EasyJet flight.
Well, you brought up a great point, Jack, because I noticed how many stags there were. Every single day, I saw either a stag or stagette in these cities. So
you see the guys dressed up like a fairy or like a ballerina or whatever.
Or everyone,
the European stag do is so good, man. So
what's it called?
Luton Airport, 6 a.m. or Stansted.
Stag do.
It's like a bachelor party.
Do? So bachelor party's called a stag do. Okay, hold on, Bilal.
And the female equivalent is called a hen do.
Okay, a hen do. Okay, you know what? We're throwing out the schedule, people. This is what we're talking about. Okay, Bilal.
Who cares about the stock market correction crash?
Tell the listeners what we were supposed to talk about.
Yeah, so we'll talk about, let's let people know what's coming so you can forward ahead if you don't want the banter, but obviously you're here for the banter. So we'll talk about the stock market, crypto, crash, correction, whatever you want to call it, the meltdown of the financial system / the rebound, whatever's going on. World War III, throw it in there. Obviously, we don't really talk politics on here, but that is all in there. We're going to talk about the Japanese yen carry trade. Trung's going to break it down. Basically, what is happening with the financial markets, because it has been a bit mental for the last few weeks.
Yeah.
Then we're going to talk about is Google search an illegal monopoly. I know Trung was sending this heavy in the WhatsApp, getting ready to grill.
I'm asking.
Bilal's bags.
Bilal's bags.
Not my bags. You guys probably have more Google stock than me. But then the last thing, we're going to talk about Overtourism as well, which is kind of related to what you said here.
Well, so now that we've started the bans, because guys, it's been a month. I want to say thank you for holding it down, scheduling everything. I know you guys did an app 2 weeks ago without me. I listened to the whole thing. Of course, I'll listen to it. The stag do. I noted that this was one of the most visible things on my trip. Was every single city, the old town. So every city I went to has an old town. It's like whatever, medieval times, 13, 14, 1500s. Stag do's. 15 dudes deep. And I mean, you said it, right? Bilal mentioned. So these were the ones I saw. You got to go with the fairy costume. That was a popular one. The other one I saw was everyone was wearing the same hat costume. That's like low effort, right? It's like, let's get 15 trucker hats printed. Like, that's a pretty low effort. Like, Jack, that's a low effort stag.
Pointless. I got a really good one to tell you boys when you finished the read off.
Well, actually, that's it. Well, let me ask you, Jack. It sounds like Jack's been on more stag dudes than Bilal has. So actually, that may not be true.
No, you're right. I've only been on a few. I've been on, I think I went 2 in the last year, but I haven't gone to many.
Okay. So, Jack, what are the rules British folk going to Eastern Central Europe? What are the rules of a stag do? You can't just do the trucker hat, it sounds like. That's just like super low effort.
No, well, I don't know if this was, don't know how common this is, but the lads that I grew up with, we started this thing where you dress the stag in clothes that are just shit enough for people to think that they dress themselves, but they're not. We used to have this thing where it was like £10, like you have £10 to spend, including shoes on clothes.
Go to Primark or something.
I'll get you a picture of my stag do, but I look like a complete bell end.
Were you wearing like leggings or what was it?
People would do like, no, it was like people would do a double take where it's like, is that dude really dressed like that? But it doesn't look like fancy dress. So it's like way worse than that.
That's the perfect balance.
Wait,
if you're in a fairy costume,
how do you spend £10 on clothes, including?
You gotta go to Primark, man. That's the full. You got some change for a chicken burger. Yeah.
Just all charity shop. Like they buy shoes like 3 sizes too big that are like knackered. Shirt too small. Trousers too big. But they did the the wet look gel, Bilal. Completely coat the head in wet look gel, like grinder.
Like spiky hair vibes back in the day. Yeah.
This is incredible.
Just look like an absolute prat.
Jack, are you all right sharing a picture of this on the pod, or is this a private
I'll
picture?
send it to I'll send it to Rafa.
Throw it on the screen right now. Throw it on the screen.
And
Rafa,
the other thing that the lads that plan my stag do made me do is give speeches in London. So they write all these scripts. Go to a like venue, a pub or like a statue or something. They would read like fake.
Oh my God.
Fake speeches about this stuff, and like people in those places would come like correct, and I had to get through the whole speech before I could move on to the next play. Pub golf, Bilal, like the rules of pub golf that have been applied to of like 18, you have to go to 18 places. Here's the
but you have a beer
specified
each?
Drink.
Yeah,
different drink at each.
So you have 18 drinks
minimum.
Yeah, minimum. If you complete it,
So by the end, you'll be sleeping on the street.
Obviously, you did though.
You did, mate. The adrenaline and the like 20s, you could do that kind of stuff. I wouldn't get a quarter way through that now, but 10 years ago, no doubt, I could do that every weekend.
Wait, I'll tell you what, Bilal. I'll tell you what's so funny. Jack goes,
I'll find it.
You had to buy an outfit for £10, and then he goes, including the shoes, and that just absolutely
that detail is key,
dude. That sent me because the shoes has to be 50% of the budget, so you really have £5 to outfit yourself. Unbelievable.
Horrible.
But Trung, you see that in the airports. Go on, Jack.
No, I was going to say we've done that just like outside of a stag do, sort of like Secret Santa. So you put £10 in and somebody else has to buy the clothes for you. And you do like everybody does it. But it's so much better when one person is
just about the joke the whole time.
You get sent into the bar first by yourself, order all the drinks, just like humiliation. It's very...
Jack, where was your stag do? Did you do it in the US or...
London.
Oh, okay. Nice. But you're already living here, right? Yeah, you've been here since you were
back
18.
for it. It was great, man.
21.
What are the popular stag do locations in Germany? So out of curiosity, Berlin? Do people go to Berlin?
I don't know.
Like Cologne?
Berlin, I would think.
Yeah.
In
Germany,
I did one in Czech Republic. I did a bunch. Cardiff is a good one.
Did you go to Prague?
Budapest.
Did you go to Prague?
I've been to Prague,
yeah.
Did you do the stag in Prague? I saw half
a stag do in Prague. That was a good one, actually.
Because their old town is sick, right? It's unbelievable.
He loots. Look at the grin on his face.
It's cheap. Beer is so cheap there too. Like
cheaper than water. That's the joke, right?
So is everything. Yes. But
that was the. I'll say about Prague.
Good. That was a good stag do.
Good times there. Yeah.
I can wrap this part about the stag do, and then we can get into the real stories. But what I'll mention is, Prague, they did a great job on the river, right? Because Fuck, I forgot what the river was. Is it the Danube? I think the Danube runs through Prague. No. The Danube runs through Budapest and Vienna. Whatever the river is in Prague, they took all the industrial stuff and turned them into bars and nightclubs, right?
Is it the Vltava?
Yeah,
Prague
that's
River?
right. Where the Charles River goes. Oh, the Charles River, or where the Charles Bridge goes over. But the whole point, the only reason I'm saying this is I was walking in Vienna with my wife and kid. So we obviously didn't hit the streets that hard with him, which is unfortunate because we were staying up late because we were on
the streets that hard with him. That's
because we were on Western time, right? We were on West Coast time. So we were out at 11 at midnight. So we were walking around when people were getting loose. I'm like, man, this is dope. But like, we're walking back to our hotel. But I walked through a beer garden and literally there's a massive sign at the front that says no stags. I was just, dude, I was crying. I'm like, anyways, that was my stag story. We could talk about over-tourism later. But let's get into the.
All right, perfect. No, definitely. No, I'm glad we went down that route. But let's get on to the show. So what is going on, boys, with the stock market, crypto? Everything's been a bit wild in the last few weeks. We haven't actually done an episode like this for a while because it's been kind of steady sailing. I guess, Jack, when we spoke, we talked about the ETH ETF, but that was kind of like expected. We kind of already knew about it. So the summary, I've just got a few points here around what's happened. S&P was down 8%, wiping off $4 trillion in market cap. NASDAQ was down 12%. The Magnificent Seven lost $995 billion.
This is over the past few weeks, right? Like
This is like the last few weeks, I guess. The Fed's is 60% chance of emergency rate cut in the next week. The volatility index spiked 65%. Crypto raised $500 billion market cap. You get the idea. Warren Buffett sitting on some cash was another thing. He sold, was it half of his Apple shares?
Dude, that was one of the, I got to pull it up now, right? We can just make this meme of the week, but Buffett, when you're sitting on, you nailed it. He sold half his Apple stake. And people are just like, what's going on? He's sitting on $277 billion cash. Man. He has, dude, and it's all invested in T-bills right now, the treasuries.
Well,
he has more treasuries than the Fed. That's it. That's the statement. So he currently owns more treasuries than the Fed. So this is the joke I did.
How much is the American government paying Warren Buffett a month? Any idea?
What have called 4% on 270, 4% annual. Jesus. So what is that? 27. They're $1 billion a month. To Buffett.
That's what the picture as well with the can of Coke.
All right, for the listeners, so Bilal explained it, but like I Googled, so I Googled this. I go, Warren Buffett smiling. This is like the third hit, and it's perfect. He's playing cards. I'm like, this is amazing. This motherfucker is 97.
He's playing cards with everyone right now. He's winning.
Chess. Everyone's playing checkers, man. So,
by the way, though, what's the price impact of him moving that amount? Couldn't you argue that he's a catalyst for this?
No, Apple was
sounds
up
like monopoly behavior to me. There,
Apple was up 20% in the quarter. Yeah, Bilal's like trying to throw shade at Apple. Apple was up 20% in the quarter that Buffett unloaded half his Apple stake. Like, I mean, it's like that's probably why they saw it climbing, and they owned. So I'll run through the numbers, and then we can hit a couple points. I want actually.
But can I ask another traditional markets question here?
Yeah.
So he's unloading this like over time and then makes a statement at the end of the quarter. Am I understanding that correctly? And comes out and says, we've got rid of this.
Yeah.
Right.
Oh, the official statement isn't out yet. 13 now.
Warren Buffett's wallet has just nuked the chart.
His ETH Explorer wallet.
Yeah. Okay, so
it's a fascinating thing too, because you can operate opaquely up to that point and then the market reacts like, shit, Warren Buffett.
Well, that's so funny, right?
Like, oh my God, naked till the tide's gone out. Yeah,
exactly.
Well, let's start at the beginning of the year. Let's backtrack it to 2016. That's when he backs at the Brink truck, $32 billion into Apple, and we've touched on it in the past, but I think it's worthwhile just teasing out the whole thing because we can tie it into this. What Bilal asked is like Bilal said 5 minutes ago, "What the f is going on?" I think the overarching thing is that people think that a recession is going to happen. Bilal said there's 6% chance of a rate cut coming up. And it has to do with
the jobs numbers came out, right?
Jobs number was weak.
The US looked like we're maybe going to recession.
It looked like the Fed might have been mismanaging again. People talking about the soft landing. Like, we're not going to try to be the all-in podcast here, but it's like the macro picture is looking like
definitely not, because we don't talk politics here, so that's already
exactly right.
There we go.
It's looking a little bit choppy, so that's the overarching picture. And then I love for you guys to tease up more of the crypto side, because I haven't really been following it. I just know that we hit almost highs again, right? Like, there wasn't BTC back at highs a month ago. Like, is that right?
Yeah, I guess so. Well, it was close to, I think it was like 70, no? 69, 70?
Yeah, it was about 69.
Around that 3-4 weeks ago, probably, yeah.
So let's go back to Big Daddy Buffett, which is hysterical, right? He's sitting on backs of the Brinks trucks for Apple, $32 billion in 2016. And you have to remember this guy. This guy, Buffett, does not do technology investing, right? That was a joke. And the way we actually got Michael Saylor on this podcast was me posting the video of him saying in 2012 that Apple will go 10x from here. He called it. 2012, basic sale was like, well, iPhone, it's a luxury product, right? It's not about technology. This is the luxury product. Everybody will own this. So Buffett backs up the Brinks truck. 2016 puts in 32 bill, which is insane when you think about it. So that investment basically 5x'd. So he, on paper, made over 150 billion on Apple, which is, by absolute numbers, the greatest tech investment ever. And this guy doesn't use email, didn't get his first iPhone until 2018. Like, Tim Cook said that he had to fly down to Omaha and set up Warren Buffett's iPhone. Like, that's how funny this whole story is.
That's incredible.
So, started 2024. Now, Apple makes up about a quarter of Berkshire's entire market cap. It's about 150, 160 billion of Berkshire's 700 billion market cap, whatever. Bilal, Jackie had mentioned, how do these sales happen? It's not like you get to see his wallet right on the web and then you see him dumping. Q1, they dump 13% of their Apple stake. So call that 10 billion or whatever. Q2, Apple's ripping because of people saw this Apple Intelligence BS. And I guess Buffett's just like, I can use some more cash. He also unloaded a big chunk of Bank of America, which he had acquired during the financial crisis. Do you remember the financial crisis? Buffett came in as like the savior of all these banks, just like bent them over and forced them to give him the craziest deals. So he ended up owning like 15% of Bank of America, unloaded a bunch of that too. So he's obviously seeing something. And that goes to answer Bilal's original question when he said, what the F is going on? I think all these things are tied in together. And the way well, before I get into the yen carry trade and how that plays into all this, what else are the thoughts of the setup going into this?
Jack, any thoughts? I can share mine if otherwise, but go on.
No, you go.
Yeah, the other, I did want to share the context, obviously this is quite a big drop. Today and yesterday there was a rebound as well, so we've seen some green again, which is nice. But like the stock market is still up significantly this year, right? Like, so just when you zoom out, 10%, we're still up like 10, 15% or whatever it is, depending on which index you're looking at. But before we go into the Japanese yen carry trade thing, I did want to call out this tweet that Jack shared with us, which is quite niche, but I think a lot of people listening to this would appreciate it. Someone tweeted, said, so the Japanese economy was running on something close to the Olympus style token economics. Which is so good. Which for people who used to follow all the crazy DeFi Ponzi's that we've covered on the pod, was incredible. That was so good.
There are a lot of macroeconomic commentators.
The response, someone said, wait until you find out about the world economy. So that's kind of like setting up where we're going in a second here. But I do want to talk about the Japanese thing. Oh, no, that's honestly is way too confusing to even do it.
Yeah.
But essentially, just think about like when we go through the Japanese stuff of borrowing from one place and earning money somewhere else. Just think of that idea.
Where does the yield come from?
Yeah, where does the yield come from?
Exactly. Okay,
that's the question. Okay. Exactly. That's that. And I remember our boy Nat Eliasson wrote. I think it was Nat who wrote that who wrote a blog post about that, actually, specifically on Olympus, called "Where Does the Yield Come From?"
Where's the
We should get him on to do that book thing, by the way.
Yeah, he's done. I actually got a message from his like PR people for Crate Lab, so I should.
Dude, he should come on, man.
We should
he should come on here. We should cook with him.
We should do that. Yeah, good
great
shout.
writer.
Yeah, he's a great writer. So let's go into the actual details of the Japanese stuff, but the high level is numbers were looking a little weak with the recession potential on the horizon, and because of that, confidence changes, and then starts off a set of actions that actually lands us in this position we're in right now. So should we talk about a Japanese?
Yeah, I'll talk through that quickly. So I'll give 2 summary points up top before we talk through the mechanics of it. The summary points are basically this: it was a crowded trade, so when it unwound, that means a lot of action happened, right? There's a lot of volatility. A lot of people are stepping onto the trade. So that's summary number 1, which is kind of why you saw this crazy impact. And it had, this is not going to be a shocker at this point. Anybody that's listening to NIA, the word fundamentals literally means nothing anymore. But like, it's not like the fundamentals of the economy or necessarily the businesses on the Nikkei or the topics, which are the main Japanese indices. It's not like that conglomerate business that, that the people are dumping money into has materially changed. It's not going to surprise anybody. The other thing, though, I do want to say is like, the larger picture of Japan, and this has been going on for decades, is
negative interest rates, right?
Like there's like Japan. So people have been burnt doing this trade I'm about to describe for literally decades. And it's because people don't understand what the Bank of Japan and the Japanese government are going to do with their balance sheet, because this country is so weird. Weird in the sense weird. No, what I mean is like they have their debt to GDP ratio is almost 300%, which means any change to their interest rate for the Bank of Japan on their fixed income assets that the country issues, it eats up their entire budget, right? So like this is why, like Bilal said, they've kept interest rates negative territory or basically zero for decades. It's because once you start turning up and raising the interest rates, you actually don't know what will happen to this country. Like literally, the economics will just implode, and we'll walk through it now. So I think a lot of listeners here will be able to intuit a lot of things I'm about to just quickly run through. But the carry trade is a fixed income or foreign exchange type of trade where you borrow money from a currency or a country that has a currency that is quite a low interest rate environment. That way, if you're borrowing it, you don't have to pay back a lot, right? Japan, exactly. So you borrow the yen. And now you borrow the yen and you convert that into a currency for a country that is a higher interest rate. It's like the limpest down right there. Where's the yield coming from?
Like the US dollar.
The yield is coming from the Federal Reserve.
Yeah.
What has the US government been doing in the past 18 months? It's a rate hike cycle. So people have been borrowing money, borrowing yens, converting it into the USD, and then getting the interest from the federal government, the U.S. federal government. And everybody's like,
really quickly, just to spell it out, you borrow at 0 or 1% and you earn 4 to 5% here, right? So
it sounds like free money, right? This is basically it. It's like, everybody's like, this is a money-making machine. This has been the joke for decades. And the thing with Japan, it's one of these safe havens. Like, so traditionally, the Swiss franc, the US dollar, and the Japanese yen, in volatile moments, those currencies go up because people will pile into those currencies, believing that them to be safe haven. US dollar by far is, look at the military. That US dollar is backed
and gold,
by,
to be fair, right? I know that's not gold. A currency, but as a safe haven for decades, that's been where people have gone.
Exactly.
And this year, to be fair, gold's up like 20%, so that might be part of it.
You're 100% right. I was referring specifically to currencies, but if you're talking about assets, gold. Agreed. And so the Japanese yen, because look, Japan still quite a very stable company, rich country, and people trust the system, and the yen can keep some stability, and it's shown that over decades, right? So that's the situation. They're like, why is this a free printing money machine? Everybody's going into it, right? So they pile into the trade, but we just saw why it's not a free, money printing machine, is because you're betting that the Bank of Japan will keep the rates low, negative, very low, and they won't follow the U.S. Fed because as the U.S. Fed raises rates, right? At the end of the day, whatever the U.S. Fed dictates with their rates, the rest of the world, they're dictating the monetary policy for the rest of the world. They just are. You don't necessarily have to be in lockstep. Like the European economy doesn't have to be in lockstep with the U.S.
But it's
economy.
all interconnected, right? So
yeah, it's all interconnected.
And it's the dominant.
America's the third of the global economy. Exactly. So America is dictating monetary policy for the rest of the world in a lot of ways. And Japan's been so divergent. America's been raising. Japan, and they're raising. They went from, like Bilal said, negative and 0, so they got to 0.1%, which is just hysterical, right? And that was like a huge
panic.
moment.
Everyone's like panic. Yeah, it's like, oh my god,
what is going on? But then on July 31st, they did like a emergency or like unexpectedly strong interest rate rise, rate hike. They raised by like 25 basis points. Everyone's freaking out. They were not, people were not expecting that. And the thing about the Bank of Japan is they know people and currency traders are like fighting against them, right? They're borrowing. You're shorting the yen by doing the carry trade because you're borrowing it and then you have to eventually give it back. So you're shorting the yen. So the Bank of Japan has been dealing with these people for decades. This is where it gets interesting. So this is actually where the carry trade starts affecting everything else. So because you're doing this carry trade, so Jack is borrowing yen, investing in American dollars. So he's shorting the yen. So what that does though is, Bilal will know this. Bilal, I'm sure you were looking at traveling Tokyo sometime this year because you know that yen is it's getting pounded,
and it was
right?
super cheap. And we see it on the feed, people flying and doing blind dates in Tokyo.
100%. Yeah. It used to be about a US dollar, about 100 yen. Now it's about 150, 160 or 140, 150-ish. I think it got it all the way up to 170. So it's like basically double the purchasing power for an American tourist. That's the whole point. And the reason that's happening, again, because Jack, hypothetically, is shorting to do this carry trade. Now, this is what happens. What happens to an economy if their currency is devalued? Their exports go up. And Japan is
cheaper to buy their stuff, yeah.
Exactly. So now Bilal is benefiting from Jack. So Bilal is now a exporter of Japanese electronics. Bilal is in a Japanese electronics company. His sales are going up because cheaper to buy, and then when that money comes back to Japan, it's converting at a higher rate. So that's also boosting the stock market. So now we're seeing all the different parts. Like it's all coming together now. The carry trade is pumping the local, the Nikkei and the Topics, because those companies are benefiting from the weaker currency because Japanese companies are a lot of export, very export oriented. So we're seeing what happens when this unwinds though, right?
Yeah, Japan the opposite hikes, essentially.
Exactly. The opposite happens. Unwinds. The yen now is getting stronger because people have to close all their short positions. They have to buy yen to close those trades. Yen goes up. Now the local companies are impacted. And then people are looking at the Nikkei and it tanked, I think 20% on Friday and Monday, but then it bounced back really strong.
I'll say it was down 12.4% in a day, worst day since 1987 from what I saw.
And just completely bounced back because everything doesn't make sense in 2024 anymore.
Yeah, completely.
But then I'll end it with this and then we can move on. I actually want you guys' thoughts on the crypto stuff. This is where, is there actually a longer term effect on this? And this is actually where the longer term effect does come in because the United States and Japan, the difference between them has been the interest rate policies have been so different. And now the US is thinking about cutting and Japan is hiking. So now literally this carry trade is completely going to unwind if this is the path it's going to go, right? And we probably saw a lot of the impact of that already. People closing, people that were just crowding into this trade. But what the problem is that Japan is actually, people might not know this, is the world's largest creditor. So they own 10.6 trillion assets globally from other countries. And now here's the problem is if Japan has a lot of liabilities that they have to pay off because the interest rates are going up, guess what they have to sell? They got to sell those assets in these other countries. And now you have like Bilal said, interconnected. That's when it can get global and pretty nasty.
Cascading effect.
Effect. So Let me know if that makes
essentially,
sense.
the whole system is wild.
It's an Olympus DAO.
It's Olympus DAO. It's Anchor Protocol or whatever the other one was. That I lost money in all of these probably. I don't even remember. But yeah, no. Thanks for explaining that, Trung. But yeah, to me, the summary, like we said, is people borrowing for lower, making money on yield with a higher interest rate. All those interconnected things come into play, and now that doesn't work anymore because of this, this pressure.
Changing policies. Yeah.
Changing policy. Yeah, but I guess the bigger question zooming out is, this happens in cycles. This happened in 2008 with the real estate, credit crunch, all that stuff that happened there. We've had it in the 2000s with, the .com.
Yeah, and you can say the AI bubble.
The AI bubble here, now, right? Exactly.
Like how much spending was pulled for, like whatever the Meg 7, basically spending $100 billion on
just pumping centers. Each other's bags, basically, right? We've covered that on the pod with the credits.
Olympus
and stuff like
DAO in another format.
Yeah. Well, Jack, it is kind of like what we've discussed on the pod before is when people criticize crypto, which, I criticize it too, but about, this is just being pumped by this. And my point to all of this has always been, that's how everything is. It's just one has slightly more intrinsic value than the other, but all of the valuations aren't based on intrinsic value alone. They're based on what something is worth what you think it's worth. And so that's
the story.
Exactly. Whereas the crypto side is basically just a more honest marketplace in terms of like everyone's in there trying to make some money or trying to do whatever. Obviously, there's people actually building real stuff as well. In the same way, people are building real companies, but the valuations of those AI companies might not be actually real as well. Go on, Jack.
Can I give my left curve reaction to this?
Yes, please.
I'm open to being rebutted on. This is the most unproductive bullshit ever, right? Like currency arbitrage. It's the most like there's like millions of people betting on the like disparity between the value of currencies. Is so unproductive and stupid. And that's like that happens in crypto too, obviously, in a more permissionless way. But the use case of excuse my injecting a Sailorism into every episode we do. Actually, the best pitch I heard on Bitcoin as an asset class is it's an apolitical measurement of value. How'd you like that one?
I like that one.
Yeah, fan. So the decisions of a central bank of any nation don't matter.
Oh, to Bitcoin.
In the short term. Yeah. Like the idea that how you evaporate or how you, maybe this activity just moves elsewhere, but the idea that there's a couple people in a room adjusting the cost of capital and printing money and injecting it into the system, you can make that argument that that's happening down the ladder on crypto. But if there's no, like, I guess the dollar maybe serves as that unit now, and maybe it isn't a massive departure from that. But the idea that the dollar can be manipulated in either direction supply-wise is another thing that has a cascading effect on the short-term
and by design,
money
because
and
that's
investment.
kind of
like
monetary
like
policy
inflation
right?
We want people to spend money, and that's the biggest and best criticism of Bitcoin too. Is if everybody just decides to save their money and not move it around, like how do we make progress? And it's a completely different mental model of storing energy and money and whatever else. Just when I read about this stuff, I'm just like, I can't. It's unbelievable. Well, we're gonna make these games, right? That humans make these like idiotic games up.
There's a whole industry called banking that does this even more.
The shared myth on top of this. Yeah, the Big Short, mortgage-backed securities, like.
We might have to do a margin
up a better Ponzi
rewatch soon, boys. Just to get us back in the zone with it. I added it to my shared list with my missus today, early in the morning, just to make sure she knows we're about to add that to the list. But Jack, I get what you're saying, because just zooming out from what you said there, to me, the question is, we can move things around like this currency, or this share to this share, whatever asset you're talking about. But there's a difference between just one big pie and repackaging stuff and selling it and, arbing it essentially versus, kind of our background is technology, which is grow the pie, right? Like that's kind of the big difference between the two. But actually generating new things that grows things. That's the theory anyway, or not just theory. It is most of the time the case. And the thing about Bitcoin you just said there, Jack, that is just one example. Obviously, back in the day, we had the gold standard. Let's see this. But the gold standard was the idea that there's a limited number of, of value that the world uses. Jack, what's this on the screen here? Consumer price index for all urban consumers. Let's talk it through.
Purchasing power of the USD.
There we go. But kind of what I was saying there, yeah.
Exactly. People. That's why I was trying to pull up a graphic to support your point, Bilal.
I appreciate that
teamwork. If there is an agreed upon apolitical unit of value, then coordination does get more efficient and sophisticated as a result of that, as opposed to these like collapsing games where you can't predict what Jerome Powell is going to walk out and say tomorrow, but you know what Bitcoin's monetary policy is today, tomorrow, and into the future to a much higher degree of certainty than what is going to be announced on YouTube from a room in DC or wherever else. So, and I have to get this, what was I going to say? It's a podcast I listened to recently with a guy that I think tried to explain Bitcoin to Bill Gates in the first few years that it existed, and was just called a nutcase for years and years and years. And this was his line. Bitcoin as an apolitical store of value, which I think is one of the more sophisticated ways to position it, as opposed to, hard money, finite, whatever. All of those things are the qualities that make it an apolitical store of value. But why is it valuable? Because it is a apolitical store of value, and the predictability of its policy over time is something that allows you to get a better picture of what is actually happening in the world, productivity-wise, commerce-wise, all of these things, versus maybe even in hindsight, these things don't make a ton of sense, right? The thing that the butterfly effect in the financial system that leads to some worldwide collapse in markets is very rarely obvious in real time, as we all know. But I can't keep track of this stuff. Maybe I'm too stupid to.
No, but you're right. You're doing the right thing by not following it. Here's
the takeaway. Yeah. Do you got the crypto movement? It's irrelevant, right? This drawdown, this is the drawdown for ants.
Well, that's a good. Right? Yeah. Oh, yeah. In terms of the drop, it's that's another.
What just happened in the
several
past week?
times.
Who cares, right? It's nothing.
I mean, there was a 20% candle
in a day. That's
candle
quite a lot. Yeah, that was.
No, it was in a minute.
Oh yeah.
At one point, it went from 2,400 to 2,100.
That was
the amount of wealth.
I'm glad I was not looking at my charts.
Literally 60 seconds.
All right, we're not
unbelievable.
Yeah.
You put the phone down at that point.
That's it. You know what? Here, that's the bigger takeaway. Here is, don't day trade. Yeah,
don't use leverage, because you definitely get liquidated on a day like that. That is a wild day.
So.
But Trung, I will say, just on, you asked about the crypto side, just real quickly on my point of view on that, is we've talked on this show for a long time about hard money, gold, digital gold, store of value, high inflation, all these sorts of things. Now, the question is, to me, there's been so many crazy things that have happened in the last few years, from, obviously COVID 2020 to, assassination attempt, all the different things that have happened over the last 4 years. The truth is, has Bitcoin really been that store of value? Now, if you zoom out, you can say over 10 years it's up more than anything else. So you can maybe say yes, but the correlation of it seems to correlate closest to the stock market from what I can see.
With high tech, yeah.
And, and liquidity, essentially. So that's where, maybe someone who knows more about that can correct me if I'm wrong. But
no, you're right. But that's I think the running joke that was made by Joe Weisenthal from Bloomberg was that Bitcoin's really just 3 tech companies in a trench coat.
Yeah, but yeah, that's brilliant.
It's 3 big tech stocks in a trench coat, right?
Yeah.
It's just if you open it, it's Adobe, Salesforce, and
Yeah.
Yeah.
Go on, Jack. What are you going to say?
But
I was going to say,
go ahead, Jack.
well, I was going to say for like as an instrument that captures that over time in a single quote unquote store of value as a product that is compelling in my mind as like you know, the Googles, the Facebook, the Netflixes of the world will compete, come and go, win, lose, whatever else, and this tracks with the digitization of commerce as this like, what do you call it, like a technology ETF or like a basket of things that are happening in that world. And if you listen to the Banana Zone thesis, it's all global liquidity cycle, right? It's like, whenever like the money printer gets switched on, where do you think all the money
but that's
like,
great
towards?
point.
Risk on. Yeah.
Complete. Well, we know what's going to happen this year. There's going to be rate cuts.
Right, so it's coming.
Almost
certainly, right? The market. What's the
poly market?
On it right
let's
now.
do this. Let's put a bow on this section. But every time I talk to you guys, you know what I end up doing? Like this micro stuff, when you guys bring up Banana Zone, I literally just went to Arthur Hayes' Medium site, and I'm like, oh, I haven't read his last 4 articles. I'm just teeing them up. Arthur Hayes is just, I need to know what this guy's thinking about all this. What are we saying?
Well, I would say what he's thinking and what he's saying is not necessarily the same thing. Or what he's doing is not necessarily the same thing. Because I did see people sharing his, because a lot of his stuff is on chain. You can see his buys and sells, and you can map out versus the different things that have been happening. Go on, what's this, Jack? Well, this is Polymarket here, yeah?
Polymarket is pricing in a 4% chance, a 4% chance of no cut. So 25% is at 47. 25 basis points is at 47%, 50 basis points or above is at 51%.
98%, the TLDR is, what is it, 98% it'll be a rate cut, 95% plus. But is it 25 basis points or 50 basis points?
Yeah, those odds are actually higher than 100, the combined. So that's an interesting.
I don't know.
Yeah.
Oh yeah, I was only adding the 4 and 1, and I was like, no, it's 95, and then I didn't actually count the other 2. So
well, the other like, you know, non-fundamental narrative bullshit thing that will track alongside all of this is like, what do you think the political pressure will be to make sure the markets look a certain way when people are driving to the polls?
Well, that's a great point. That's a very good point.
And that's a lot of the thesis behind why is the liquidity cycle about to tick up again. And I don't know how intentional this was, but you know, the Bitcoin halving maps to the presidential election cycle. Hilarious. It's like every 4 years, it maps to like this last year of a presidential cycle, which is
new. Satoshi new.
Wow. Wow. You know what, boys? You want to get into conspiracy theories?
Let's do it. Let's do the tinfoil hat corner.
Let's do it. Put it on.
Well, the tinfoil hat version of that is like, this is an instrument that people who have influence in the world of politics devise by themselves. You know, we're not none the wiser. But just like the political pressure to make the markets not have what happened yesterday anywhere near the election.
Oh yeah.
Jack, spit it out. What is it?
Is insane.
Spit it out.
Money printer, quantitative easing under another name. Go and read Arthur Hayes. He's going to say that exact thing. Hey, they can't call it quantitative easing because they've already played that card, right?
That card's done.
Little narrative thing is gone. Have to come up with some other bullshit thing.
Well, bank term funding deposit, right? That's what they said. Is like we'll back the bank deposits and the fixed income product. That's literally what he said, right? He's like, that's a new name for QE. We're providing liquidity in the market. All right. I love that.
Or Banana Zone, if you want to call it that.
Banana Zone, exactly. That's a great rebrand as well. All right, so let's talk about Google search being an illegal monopoly. Trung, I know you've been following this. The headline here is that U.S. federal judge rules that Google search is an illegal monopoly. And that is basically in reference to Google's deal with Apple mainly, right? Like being a default search engine on Safari, it seems, is like the main thing here.
That'll probably be the biggest. That's the headline impact.
But there's also like Android. I think they've mentioned, and Firefox and stuff like that. But these deals that they do to say we're going to be a default browser. Deals. The distribution deals. So
I'll walk through exactly what they kind of did. The federal the court system. They started this investigation or this case 4 years ago. And Bilal had mentioned the Apple deal. So just to give context, Google has paid Apple $100 billion over the past decade to be the default service on Safari on your iPhone. And that just speaks
free money,
to
really,
iPhone
right?
users. It's literally 100% margin free money. It's the craziest. It's insane, right? It's the greatest deal
insurance. Ever. Yeah,
exactly. So you have to ask yourself, why would Google pay that much? Clearly, it's worth it for them, right?
Well, also, yeah, the question: how much that 100 billion translates to X amount in?
Exactly.
Would you buy $2 for $1? Yes,
exactly.
Well, here I'll give you the internal calculation that they did. Google did this came out in Discovery for the case. Google in 2020 did a basic research. What would happen if we lost the iPhone being default? So if they were no longer default on Safari, they found the courts found it. They had
this was an internal thing.
Yeah, this was an internal thing. They would have lost 80% of the search traffic they got through the iPhones if it wasn't a default. So this assumes, for example, that Apple would no longer make Google the default, right? Apple has a search product that they completely let sit on the vine because they're getting this free $20 billion a year, which is what it is now. There's no incentive to create a search product, right? There's free money, but Apple has a search product in the same way they had Apple Maps, which 10 years ago, which we've talked about before, was shit. But now it's competitive with Google Maps, right? Like if Apple had to build a search product, if they had to replace... What's up?
Go on. Finish your thought, sorry.
Yeah, I was just saying so what's happening here? So let me go super high level again. The purpose of this case was for the federal government to determine, what is the market we're looking at? Is Google a monopoly? And then are they abusing that monopoly power? Because being a monopoly is not in and of itself illegal. It's if you're using that monopoly position to cut off competition. So Bilal had touched at the top. Bilal mentioned Apple, the $20 billion deal. And then he also mentioned Android and Mozilla. So that's basically what the courts are looking at. They said, yes, Google is a monopoly. They have 90% of search market in North America. They have 95% of the search market on mobile in North America.
Is there a number that people use as a monopoly? Is there like a percentage number that qualifies as a monopoly? 51%?
There is, and it's different for every industry.
Okay.
And whatever that number is for this digital advertising market, Google's way past that, right? Mm-hmm. Bilal's just like, Bilal knows.
No, I mean, because when you asked that, Jack, I was thinking like studying this 20 years ago, whatever, like in the UK supermarket, like Tesco's, Sainsbury's, Asda, it was something super low back then. It was like more than 25% or something like that.
Right.
But that's obviously a more competitive market. In technology, it's like winner takes all or winner takes most. Mm-hmm. And there's no switching costs for someone. Like they can open up Bing on a browser or they can open up Lyft versus Uber on the phone. So yeah, go on, Trung.
No, but this becomes the question, Bilal. You nailed it. Is like, people always say, it's just one step away. But that the courts had to acknowledge that. They're like, well, actually, it's not one step away. What the courts found is like in any digital market research or for their research is like whatever the default is, that's 90% of consumption.
Use. Yeah, that's
Jack
true.
knows this. And Jack, design, you know this 101. The default.
Well, people don't even know what browser is half. Remember that whole thing as well.
Exactly. Yeah, one click.
We lived through the era of the address bar boys.
Yeah.
But most other people have never, not most other people, but there's a whole generation of people that their experience of the internet has been type the query, press the button, click the link. That's it. Well, there's no typing into an address bar.
Well, Jack, that's a great point. But even I remember Trung, like when Google Chrome launched, I remember I used to use Firefox, And I was like, no, I remember my friend showing me at uni or something. I was like, yeah, it looks cool, but like I can't like Firefox. I don't want to like move stuff around. I've got all these. Yeah, because that was the best browser back then. And then I remember when I joined there was a whole campaign. Like for years, there were campaigns about educating people on what a browser was, and they would go in the street and interview people, and that would be an advert. It would be on TV or like YouTube ads or TV ads, and they would go and ask someone like, "Do you know what an internet browser is?" And most people would be like, "I have no idea what you're talking about." Then the second question, then someone will be like, "Oh, you're talking about the E, like the internet, like the E, like we're talking about Internet Explorer." Right? And so that was like where people were. And then over time, people realized like, oh, it's actually kind of slow. This is better. Or like there's malware, like all these different things. And then they added Chrome extensions. So I would argue like, Chrome became the better browser, and in combination with educating people and spending lots of money.
Chrome is a good browser. Remember, it's defensive, right? It was a defensive move.
Do you remember?
Go on, Jack.
Yeah, I was going to say, do you remember fully stacked out with malware Internet Explorer, i.e. 7 or like just
all the pop-ups
the window for viewing content is like 100 pixels, and it's just bookmark tabs, malware. I used to make a living cleaning that stuff up, boys. So Google's actually stole income from me.
There you go. Taking out
I would
your
go
pockets.
and run my malware scans, £20 computer cleanup.
That's hilarious.
Install Firefox, I think, at the time. Mate,
you're right. It was a terrible experience.
Boys.
Download.com. You'd be downloading that .exe file, worried about malware. Exactly.
Mate.
But
let's walk it back,
right? Wild West, incredible.
Yeah.
Let's bring it all back to what we're talking about. Is Google dominant in this thing? Yes, it is. It's a monopoly. Is it abusing its monopoly power? Okay, so now we're getting into it. It is, the court says, by doing these deals with the phone carriers, Android. If you want Android, you got to pre-install XYZ. You can make your own Android. If you want our Android where it's turnkey, XYZ, right? Mozilla, we're paying you. So they paid $26 billion last year to be default. And default, as we're seeing in digital environments, which you talked about, extremely powerful. So courts are saying, we find these payments to be an abuse of your power. Okay, so that's what they're saying. And they compare it to Microsoft in the late 1990s. Is Microsoft tying Internet Explorer to Windows, the operating system, and abuse of power? That's what the thrust of that case is. It was, but they settled. They were going to split up Microsoft. They were literally going to split Microsoft.
Abuse of power?
Because defaults. Whatever the default.
Yeah, but what about iMessage on iPhone? Why is that not a monopoly?
That's kind of the question.
No, but you have to remember how the technology has changed. This is the mid 1990s, and it was so dominant.
That is a good question, Jack, and it's basically the threshold. What's the threshold here?
Yeah, and it's all philosophical, isn't it? Which is law, I guess. Yeah, it's like.
Well, I think the Microsoft. No, go ahead, Jack.
Man, the search engine thing is so fascinating because the quality of the experience is dependent upon the power law of how long this thing has crawled the internet for, the resources that the company has to like surface good results, which again becoming questionable again now. But like it's in defense of consumers in theory. What's the tealism? Like all businesses should be monopolies or monopolies.
No, that's right. I agree with you because I would like what browser? I mean, what search engine would you use? Like on your own, right? You would probably just use Google. You would want it to be Google. I guess
the legal standpoint
beyond.
So
the payment is the issue, right? That's what you're saying.
Well, that's what they're saying. That's what the courts are saying. They're like saying you're locking out competition by doing these payments, and then they're saying by locking out competition,
they can pay more.
Yeah, they could pay. Well, then now they're saying though by locking out competition, you're charging monopoly price. Well, let me ask Bilal about this. Bilal works in digital advertising. Could Google search prices be cheaper? Like that, I think that's what the courts are saying. Are they protecting this monopoly? They built it originally from ingenuity, a better product, right? Now they're just protecting that market they've created for themselves. Do they overcharge?
Well, they're not saying it's a market. It's decides the price. So I don't know.
Is it actually a market? Is it actually?
Well,
it
is. It's an auction.
People
pay
for
it. You
and
set a bid. So like there is a minimum you can bid, like which is a few cents or whatever, but the market decides on the supply. Whatever you're willing to pay, you can bid. So like that's why I think it's actually probably the worst business to critique for that idea, because every other media property that sells advertising, most of them set prices. Do you get what I mean? Yeah. So whereas they're the ones who basically brought the auction model. But
Google basically owns the entire stack of digital advertising on search.
Well, they own
right?
search, and then digital advertising includes display ads, paid social, includes like there's so many more.
They have AdSense. They have
of course. But the monopoly is really search, like because if you compare display, like Facebook is like the other big player. It's basically like a duopoly, right? It's two of them. So like paid, like all of the money that is spent on paid ads on Instagram, Facebook, etc., that is comparable to AdSense. Close enough. They're not exactly the same, but they're not search. Basically, they're like images and videos, right? And so I don't know. Yeah, I think Google search is a monopoly, like for sure. Obviously, right? Like that's
is it abusing? That's the question, right? So like, let me throw it out to you guys.
Yeah, go on.
Let me add this part. There is no remedy yet. Google is going to obviously lawyer up, and they obviously have. But I mean, they'll continue. They're going to fight it. It's going to take half a decade before a resolution is made. Just to give you some context, Microsoft ended up settling with the U.S. government. Right? They didn't split up Microsoft, and but as had been talked about, people are familiar that decade about that Microsoft was under investigation. It just sapped the will of the workforce, right?
Yeah.
And like you couldn't launch anything without having 10 lawyers look at it, which is why people say
I think they've had quite a few of these before. Now I know this is probably a bigger one, but they've had quite a few of these over the years, I think.
Yeah, different type of cases.
Not at this level. This is a pretty big one for sure.
So here's what I'd ask though, right? Because the European Commission also hit Google something similar. And then they created a resolution. Is like you have to pick your browser when you open up a new phone. I meant your search engine. But guess what happened? It didn't change Google's market share at all.
That's interesting.
So like, what is the actual remedy here? What's funny is that I think we all agree. It's like Bilal just said, Google clearly has a monopoly in search. But like, what is there even to be done about it? It's like Europe tried and people still just defaulted to Google. So I think the interesting thing that will happen is this Apple-Google deal is almost certainly at risk, which is kind of crazy.
Also for Apple, shouldn't Apple also be kind of annoyed? They're probably going to combine forces because
money.
For them, if they had to take that away, they would basically either have to offer it to other people, and then people. But like
no one's paying $20 billion, right?
Bing is not going to pay the same amount because their advertising business is a lot less.
Well, they actually found in this court case that to get the same value, this revenue share agreement, because that's essentially what it is. It's a rev share, right? It's like Google's making whatever. Well, I didn't even finish. Google did internal. They said they'd lose 80% of their traffic from iPhone, but that was worth about $35 billion to them. So
like for how long? Like for
1 year.
Period? For 1 year.
So they're willing to pay.
So they paid 20 to get
35. Exactly what you guys were just alluding to earlier, right? It's like, it's a no-brainer. So they're paying about 30% of how much they made from iPhone. That's actually
quite a lot. That's more than
it's crazy, right? Yeah. Well, it's like the App Store. Like Apple squeezed them because Apple has a monopoly on their product. There it is. Apple has a monopoly on iPhones. So the question then becomes, what is to be done? And Bilal nailed it. It's like, it sounds like this agreement is going out the window. So here's what's crazy. The services revenue for Apple on a profit basis is almost as much as the iPhone is now. So on a profit basis, because services is 78% margins, iPhone's 30% margins. Right?
Talking about like Apple storage and stuff like that?
Yeah. Apple iCloud. Storage, App Store, the 30% rip on everything that's bought through App Store. But this Google deal is actually involved in services. So if this $20 billion gets taken out from Apple, that'll impact their services business, this is crazy, but only about 20%. That's how good the services business has grown. So the TLDR basically becomes this. I think we can wrap it with this. We don't know how it'll take 5 years for there to be resolution, maybe more. But this Apple deal is probably toast to some capacity.
I think they're going to settle. There's going to be it's just all lawyer shit, right? Like they're going to all fight each other. they're gonna make a deal. It's like game theory. It's like they're gonna cut a deal. All the regulators want is to get some money, understandably, and some two, to like signal something politically, to say, look, we've gone after the big bad, big companies, which I get, like, fair enough. So, but I think there's a difference between the legal stance and the philosophical. Like, I know, Jack, you were saying the philosophical is the legal in a way, but in this case, it's kind of more about, like, what's the legal precedent for monopoly power? And there isn't one, because this has never happened before for this sort of product. So like all of the monopoly power stuff is from supermarkets and factories and agriculture, right? Like, it's not like
digital economies.
Digital, and like it's so specific to the context of 2024 of this amount of people using X number of iPhones and Android phones, all that sort of stuff. So I think they'll go after them. They'll make some money, whatever. Like we said, like, you can kind of make an argument for another 5 or 10 of these. Like you just mentioned App Store. You can say, well, what about monopoly power on social networks? Is Facebook a monopoly because they've got Instagram and Facebook and WhatsApp?
The utility of them is based on the fact that they're a monopoly, right?
Exactly. Right. The power law that you said, like, that makes it or the network effect.
Let's go on a Facebook where none of my friends are on it.
Yeah. Well, but your mum's friends probably still are, right?
I'm just saying. I'm saying the political message that sends is like let's obliterate this thing that serves a purpose because
for everyone
it has this reach, and let's like grind
it's
that
ubiquitous,
and like I don't envy people that have to like litigate that, because there is no easy way to challenge it. And maybe what is it? We didn't mention this, that OpenAI is launching a search product.
I was just literally about to say, Search GPT. So, or whatever it's called. Jack, I was literally about to bring that up as the next point. Apple has already worked with OpenAI to develop Siri with, Chat GPT, whatever. That may be just an easy pivot to be like, okay, they're creating a search GPT. That's a competitor. We're making it more of a competitive market by using them. Maybe they're just going to have to go out and do the auction and say who's willing to pay what again. And the difference is now there's a new player in town, and maybe just Google. I mean, Google would obviously still pay the most, right? Because it's worth a lot more to them. But OpenAI with Microsoft backing could actually come in and say, well, why don't we? Yeah, completely. Yeah, that I think it could be really, really big deal if they could do that.
Well, but actually, when we're working through the numbers of how much Apple was getting paid, so whatever we came up to was like 30% of how much Google was making. They found out from Discovery that Apple was looking at Bing to kind of counter, and they realized that to get the rev share agreement to work, they'd have to take 100% of the amount of money that Bing made.
That's ridiculous.
So actually, let me pin it with this thought is something that Jack said. Jack's talking about Facebook, and going after these quote unquote monopolies. Actually, a big part of antitrust is to define the market, right? Like Bilal was talking about the grocery stores, and he's saying, well, what is a competitor to Kroger's, right? It's like, is the mom and pop shop on the corner a competitor? Probably not. So that's where it gets interesting with these things. But search is so clear, right? It's like this is the search market. You're typing into a box to get a result. But I mean, long term to go. I think that's TLDR.
Well,
wait, go ahead, Jack.
I was going to say there's another like philosophical discussion to be had there, isn't there? Like, how do people find information? Is like I don't know. It's it's fascinating, and I think Bilal's take was the most spot on. Is like just like legal game theory of like get a political win, bung a few checks off in the right directions, and carry on as usual. That's basically the story to report.
Okay, so this is the prediction. Here's the prediction. This is the NIA. This is not legal advice prediction. The Google will pay over $1 billion to some sort of fine. They'll probably lose this.
That'll be a steal if they could do that. Because
how long will it take Google to generate $1 billion in profit?
It probably just happened today. Just like literally today, they made $1 billion.
While we've been recording the pod, basically.
So Apple will lose this deal, which means I think the only way for Apple to recoup this, they're going to have to build out their own search and ad stack, which they've actually been working on.
I think they can do it with OpenAI though.
Yeah, well, there you go, right?
That
So
makes,
there's a
because
theory.
we've been saying they can do that, but Siri's still shit, man.
No, but
it still caused my.
stat.
I mean,
No, not-
OpenAI,
not
I
AI.
wouldn't trust.
I'm talking about
I wouldn't
search product.
No.
trust.
I'm just
Safari.
giving an example of like they've been working on this stuff for like
Yeah,
Siri
Siri's
is
different,
based.
though.
No, but Siri is a type of search. I'm saying it's a query.
Oh,
It gives
yeah,
you an
seriously.
answer. That's what I mean. I'm just
Well,
saying like
now they're motivated to do it. They're $20 billion.
I think they should do it with Open. If I was them, I'd be like, let's go OpenAI. Let's
do
keep
this.
Google on their toes. It brings up the price for Google too. Maybe they can auction
That's
it
true.
later. Let Google settle. Then they come back for the big bag, 100 billion. There you go. There we go. I know, Jack, you got to go in 2 minutes, or you've got another call in a second. So, Trung,
Well,
if
I'll
you've
fire
got,
to the Overtourism with you, Bilal, because
yeah,
I
I'm
know
just
that you're a
gonna
big traveler.
share the screen, and then Jack, feel free to go whenever you need to log off, mate. Good to see you.
I'm gonna
mate.
go now, boys. I'm gonna
All right.
catch this on the recording.
That was
All
fun.
right.
That was fun, mate. See you soon.
Peace.
Peace out. Good job, Butcher.
Good stuff, Trung. All right, Trung, do you want to talk about
Yeah, no, this is
tourism?
great. I think this is a great category for both of us because
Yeah.
I mean you're a big traveler. You're big. Why don't you talk through what you're looking at here for the listeners?
Yeah, so
and,
this is from The Economist you shared, right?
Yeah.
So this is, the title says Following the Herd, International Tourism 2023. And I think what this is showing is ranking the cities that have the most tourism versus their population, I'm assuming, right?
exactly. So why don't you work
Arrivals
through that?
per resident. There you go. That's the first
Exactly.
column. So top of the list is Amsterdam. Which
Is that
I didn't
shocking to
expect.
you?
Yeah,
I did not
thought
expect
Paris.
it.
I thought it was going to be Paris, which is number 2.
So
just
how
'cause
many? Tell the listeners. There's 10.
Yeah, arrivals per resident, Amsterdam 10.1, Paris 8. So does that mean for every one Amsterdam resident, there's 10 tourists that come a year?
for that year. Exactly.
That's wild. That's
Crazy,
crazy,
right? I had no idea, dude. I would
Yeah,
never
that's
have guessed
incredible. I'm looking at like New York and London. So London's 2.3. Even 2.3 is kind of high. Like I thought it would be, just because the population's so large. I had no
that. It's
idea
like
of
50
like how
million
many.
visitors or whatever. No, it's 20 million visitors, right? Because London's
No,
about 10
because
million.
yeah, 10. So you're right, 20 million.
Okay,
a year.
but
That
so
makes sense.
let's I'll walk through the top. So it's Amsterdam, Paris, Milan, Barcelona, Kuala Lumpur. Surprising.
Yeah, because they've got a massive
Dubai?
population too, right?
You got a big population. Dubai, Osaka, Rome, Bangkok, Singapore. So big. So let's close that a second and we can
Yeah.
open back up with the other thing. But so Bilal, I wanted to talk to you about this because I know you travel a lot. You've done a lot of nomad type stuff where you've taken 6 weeks here, 8 weeks there in a city, right? And from my trip, which we talked about from the top, I noticed the most in Dubrovnik. You've been to Croatia, you said.
Yeah.
You've been in Dubrovnik.
Yeah, beautiful.
Do you remember?
Is that where the Game
going
of
to
Thrones stuff was?
King's Landing, exactly.
Yeah, beautiful.
Do you remember how crazy busy King's Landing was? It's insane. I don't know if you remember this.
No, I can't remember. It was probably really, really big. I went in like 2012 maybe. So
So you actually went before
Maybe it was
the series finale of Game
finale.
of Thrones. That's
Oh,
when they
got
said
it.
it was
Okay,
insane.
okay.
They
But
said
I
you could
remember
not
'cause
move.
I wasn't even like, I'm not even a big, I haven't even seen the show. Like, so I literally don't even know much about it, but the people I was with were telling me that was going on. I was in a very different zone. This was 2012, how I was 24 maybe.
A
20,
different content
24.
zone at the time.
Very different. Yeah, I was going to Hvar and Dubrovnik, 2 very cool spots.
Did you hit Hvar Beach Club?
Hvar is beautiful too. Yeah, that was the trip. Great trip. Very, very fun.
Well, Bilal, let me talk you through a couple of details. I'd love your thoughts on all this. So the thrust of this is over tourism a negative? And you probably saw this summer, right? Like
Barcelona, I think was.
the
getting hit
Barcelona
with this, right?
residents. I don't know if a lot of people saw this. It went viral, but residents in Barcelona were just so sick of having nonstop tourism that they were taking water guns and shooting like American tourists.
Oh
with
man,
water.
that's wild.
You
dude.
can't do that, but
Yeah, that's
I
terrible.
get the frustration, right?
Yeah,
Like,
for sure.
talking to the Uber drivers and the cab drivers on my trip, I was just like, on the one end, yeah, tourism boosts the economy, but we're going to tease through a lot of things here. It's like, let's talk to the pros and cons. Here are the pros of tourism for a hotspot. A lot of places that we talked about. The pros is you're getting money from people that aren't using the tax resources. They're not using healthcare. They're not using the pension system, right? So it's like that's a net positive, should be for the fiscal benefit. But the problem is that money is being concentrated in certain areas, whereas the benefits are being a little bit more diffuse, as in Barcelona is taking all of the pressure of tourism, right? like I'm sure people go to Seville, people go to Madrid, but a lot less in Barcelona. But that tax money is going to kind of get distributed, right? So you see that is like
so wait, sorry, the tax money needs to be distributed to all of Spain?
Just in general, right? It's
you mean it's just the Spanish economy?
Yeah, just in general, right? It's like it's going into the Spanish banks. I mean, the Spanish government's coffers. A lot of it will stay local, but not all of it, right?
And
not
obviously
100%.
Barcelona's got its own thing with it wanting independence, like people want that already.
So like there's that tension. But like tourism also is helpful because it's off hours. It's like the train system is going to be used off hours. It's like people are touring all day, not just 9 to 5, right? So like there's these diffuse benefits, but then the negatives we just kind of mentioned is like certain localities are taking the brunt of it. And then here's an interesting one. We talked about it briefly, and it's called the Dutch disease, which is kind of funny because we talked about Amsterdam had the most tourism, but the Dutch disease in a traditional economics parlance is the idea that there's a time when the Netherlands found a lot of energy, oil resources. And then what happens is that when that country wants to exploit a resource, so Saudi Arabia is a great example, how much of the economy goes towards the oil industry, right? So similarly, taking talent away from developing other things like technology. Similar things happen for countries that have high tourism. If you're the Maldives.
Oh, yeah.
Right?
Yeah, all the jobs are related, you mean, right?
All the jobs are related to tourism. So they pay the best because this is where the foreign money is coming in. People don't want to work in other industries. They're not developing other technological or innovative industries. So that kind of hurts the economy. And then what else was there? Okay, so here's a big one. What can localities do? They can charge taxes, right? Like Venice right now.
Trunk, before you just as you're getting into this, can I just say one extra thing? I would also want to differentiate, which isn't in this chart here, that in the last 10, 15, 20 years, the rise of the longer term travel and the nomad travel versus just regular tourism, because I think, Lisbon had this obviously in the last few years, Barcelona, and that specifically hits people's rents more than it does maybe in regular tourism. And before Airbnb was around is actually another point, because before you weren't competing with a random person for rent, right? Like if someone's a tourist in New York, they're going to stay in a hotel 20 years ago. And that doesn't impact my rent as much or at all. Whereas now people were obviously setting up Airbnbs, taking off supply from the market that then hits me as a resident. So I just wanted to bring that point up, and specifically with Barcelona and Lisbon.
Well, I'm so glad you brought that up, because I was literally just walk into what can governments even do, right? So you limit the amount of short-term rentals, which is happening in New York, right? It's like, what are the rules?
Has to be. I think you can only do over a month or something like that. Like they don't want you to do short term.
Exactly.
I don't know how that's enforced, but like that's the rule anyway, I think.
You nailed it. It's like, what can governments even do, right? So I mentioned taxes as one thing. Is like, so Venice now is, if you're an out of towner, you got to pay $5 to step in. I don't even know how they enforce it. This is the difficulty of it. It's like, the thing I noticed going through Europe was, I mean, one of the biggest offenders was cruise ships, right? It's like, you should just roll up in a cruise ship, take photos, eat like an ice cream, like a gelato, and then you bounce. So now you're really crowding the area, quote unquote, over tourism, and without contributing to the local economy. So that's actually been dealt with too. Like the same way you talk about governments getting rid of short-term lets. What they do with cruise ships is, I remember I was asking in Dubrovnik, they're like, well, actually it's very simple. It's like they just cut how many cruises could dock. Blah. So cruise ships. Have you done a cruise ship in the Europe?
No, I haven't done a proper cruise. No,
but I think that the TLDR takeaway is like kind of jumping off your point about short-term rentals. It's like, what can government even do, right? It's like, but they ought to get rid of the low-hanging fruit, which is these cruise ships. You can't be docking, rolling and eating one gelato, taking 100 photos, and then bouncing, right? So cruise ships are preventing how many you can dock every year. Taxes. Interesting about taxes is they'll work in some locations. Like if you mentioned Maldives, if the local government raises taxes, they did research. They said if they raise tax by 10%, the local travel tourism falls by 5%. But that's because a beach is fungible. If you've got to pay tax in Maldives, you just go to Thailand, right?
Yeah.
Whereas if you raise a tax in Barcelona, here's the problem. There's only one Sagrada Familia. Like people are going to go no matter what, right? So yeah, that's the takeaway. Is like, a tourism net good. I think everybody kind of, barring these negatives that we talked about, net positive. But just be respectful when you travel. Spend some bucks. Like
no, it's. I mean, like you said, it's a bit sad. Obviously, people, shooting water guns at people. But I do get the frustration.
Oh yeah,
like, man, it's the reason I don't really go. Like, I hardly go into Manhattan. I mean, I like Manhattan a lot, but there's parts of Manhattan I just rarely ever go because I know it's going to be like selfie sticks.
Tourism central.
And which is obviously, I'm a tourist too in lots of places, so I get it. But if I can choose not to be there, I obviously do. Anyway, nice one, Trung. Good to have you back. Thanks for that breakdown.
That was great, man.
Let us know what you think of this one, everyone. Appreciate your support. Keep spreading the word with your friends in the group chats. If anyone's like, what the hell's been going on this week? You've been sending each other these memes or whatever. Share the episode with them. Exactly. So hopefully that was helpful. Thanks for sharing all that, Trung. And we'll see you guys next week. Cheers.
Amazing. Peace, guys.